together. Also, I would like to project my screen here on an upcoming training that is scheduled for March. Taxation, financial and audit risk management. We have a discount for a group of 5 packs and above. You will be able to pay 49, half the price that we normally charge. So feel free to reach out to us on the numbers below your screen or email us at info@capable.com so that we're able to help you and assist you accordingly. All our programs, we have a discount for a group of 5 and above. We'll be charging half the price, that is 49,850 Kenya shillings. Yeah. Joining, yes, I can see people are starting typing. You can type where you are joining from. You can type your organization. We can see we have students. We have Austin Muya, who has joined us today for this session. Feel free, and you can ask as many questions as possible. Okay, we'll begin shortly. We'll begin our session very shortly after. And remember, the certificate. I'll be able to demonstrate on how we can be able to our certificate. And also, remember this session is being live streamed on our YouTube channel. In case you miss or due to any other unavoidable circumstances, you can follow us on YouTube and you'll be able to have a recording of this session and other sessions that we've done before. So subscribe and follow us on Facebook and also other social media channel so that you are in copy of our upcoming activities for this year, including the free webinar session. Thank you very much for joining. We will begin in a few. We'll begin at exactly 10 minutes past noon. So you can still invite your friend. I can see Josh from GT Kenya. Catherine is joining us from the Central Bank of Kenya. Keep on texting, keep on chatting your organization and the place where you are joining us from so that you may be able to understand the diversity of the people joining this training today. Keep on texting, keep on chatting as we continue on. And also feel free to ask as many questions as possible so that our expert will deal with them at the end of our training. Hillary is joining from Nairobi. Keep going, is joining us from Sensei Institute. Feel welcome. Invite your friends. Showcased our calendar. For more information, you can visit our website at capable.com calendars. You'll be able to get more trainings this year that we have scheduled concerning risk, audit, and also tax. So feel free to visit our website whenever you are in need of any training or contact us at the numbers that are below. so that we may be able to assist you accordingly. And remember, we have a discount for a group of 5. We'll be charging half the price. That is 49,850 Kenya shillings. So we will begin in the next 4 minutes.
Yes.
You are ready?
Yeah.
Okay, so all right. We start 3 minutes.
So
You can project your screen after stopping sharing screen.
so
Feel free, Mary, karibu sana. David from Susol Technology, umekaribishwa sana. Welcome to our training today. I invite more friends. Anne Grace from Performance and Deliverance Management, karibu sana. Thank you for joining us. Thank you for joining us wherever you are joining from different parts of the country. Others also who are in diaspora, you are welcome for this session. So I'll begin by introducing our expert for today. Then we will be able to proceed from there. Karibu sana Kenneth, joining us from Kipra, Nairobi. Asante sana Eric from Taita Taveta. Welcome for this training. Keep on texting so that you may be able to understand the diversity of the people joining us today, and also we may be able to tailor this program for you. Remember, there will be a certificate at the end of this training. I'll shortly show on how you can be able to download your certificate. Ribu Job joining us from Help Kenya. Gilbert Ribu Sana from Nakuru. So just to introduce our expert for today, our expert is called Kelly David, who is the managing partner for Kelly and Mulay Associates. He has extensive knowledge in tax and audit, having worked in various institutions as a trainer and also a consultant in tax. So feel free to ask as many questions as possible so that we may be able to help you and assist you in matters task. We will begin from there. We'll welcome Kelly to take it from there. Hand over the mic to Kelly. So that
good afternoon.
Yeah. Yes.
Confirm that you can hear me.
Yes, we can hear you.
Okay. I will be the presenter for the day on the topic tax planning webinar 2025, proven strategies for maximizing compliance and savings. Just a snapshot of the entire presentation before we start. Why is tax planning? And what does it entail in the topic tax planning? If you live in Kenya, of course, I believe all of us live in Kenya. You're aware of the various taxes and the effect of taxation in business, and even what tax has cost with regard to our disposable incomes, both on an individual capacity and even at a company level, corporate level. The line for the day is that tax planning improves business cash flows. I'll begin by presenting our topical issues, tax planning. And the question is, what is it? And in a nutshell, it's an exercise carried out by a taxpayer to meet his or her tax obligations in a proper, systematic, and orderly manner, availing all permissible exemptions, deductions, and reliefs under existing tax statutes. Confirm you're able to see my screen?
Yes, but you can open the slides.
All right. Everybody is able to see the screen?
Yes.
All right, like I said before, our topical issue is the tax planning. And the question is, what is it? In a nutshell, it's an exercise carried out by a taxpayer to meet his or her tax obligations in a proper, systematic, and orderly manner, availing all permissible exemptions, deductions, and reliefs under the existing tax statutes, having no intention to deceit the legal spirit behind the tax laws. In a simple language, that as you undertake tax planning, you have no intention in your mind to break the existing tax laws. The next slide is tax planning and tax avoidance. We cannot discuss tax planning without discussing tax avoidance as well as tax evasion. So tax avoidance means planning to reduce or negating tax liability legally through permissible ways. Simply, it takes into account loopholes of tax laws, intentional tax planning before actual tax liability. There's a line after tax planning that addresses the line of demarcation between tax planning and tax avoidance is very thin and blurred. Slide next is tax avoidance and tax evasion. We want to understand what does tax evasion mean as well as tax avoidance. What is tax evasion? In a nutshell, tax evasion involves where tax liability is illegally avoided. We attempt to reduce taxes by help of unfair means or methods. We carry out tax omissions. Tax evasion is unlawful. Tax evasion is punishable under the law. And finally, it involves intentional misinterpretation of the law. You're doing the exercise with the intention to beat the tax law in an illegal manner. Therefore, tax planning should not be done with an intent to defraud the revenue. Though we say all transactions entered into by an assessee, taken individually, could be legally correct. Yet on the whole, these transactions may be devised to defraud the revenue. Therefore, or thus, tax planning for tax should be correct, both in form and substance. For us to discuss tax planning, we have to talk about it at an individual capacity and at a corporate level capacity. Therefore, I present the areas of tax planning, and we start with individual tax planning. In simple terms, individual tax planning will affect even us, both the presenter and the participants in the webinar, in that if individually taxes are not planned accordingly, then there will be an effect in terms of the net receipts or the net disposable income available for your spend. That means if you don't plan tax effectively, or whoever does the taxes for the purposes of computing your net earnings, then you'll have less net pay in your pocket. So individual tax planning involves, for example, in the context of retirement benefit schemes, contributions towards a registered pension scheme is an allowable expense. Therefore, that means any one of us that is contributing to a registered pension scheme, that cost should be considered when computing your net tax liability of the PAYE. And what do we consider? 3 items for the purposes of deduction: a set limit of 360,000 per annum, or Kenya shilling 30,000 per month, 30% of the pensionable income, and the actual contribution by the employee. We deduct the lesser of the 3. This figure actually has been revised by the Tax Law Amendments Act that came into effect in 27th December 2024. Initially, the set limit of 360 was 240, and the 30,000 was actually 20,000. Additionally, pension contribution or contributed by the employer on behalf of the employees is a tax-exempt benefit. So we are simply saying, if an employer is contributing pension on their behalf, then the individual, the accountant, or the HR computing your taxes should not include this benefit as a taxable benefit. Registered ownership savings plan, if you are contributing for the purposes of acquiring your house, that amount is an allowable deduction against employment income, and we compare 2 items: the actual contribution and a set limit of 96,000 per annum. The lower of the 2 is deducted before computing your PAYE. Mortgage interest deduction: if you have a mortgage specifically meant for home ownership, we consider an allowable limit of 360,000 per annum or 30,000 per month, and the actual contribution. The lesser of the 2 is deducted before computing taxes on your individual earnings. Continued. Similarly, with respect to the Tax Law Amendments 2024, effective 27th December 2024, any amount that now is deductible for affordable housing levy shall be deducted from the employment income before computation of taxes. Initially, this amount was not deductible for tax before 27th December 2024, but after the amendment, that contribution becomes a deduction against employment income for the purpose of computation of taxes. as well as contribution to a cost-determined medical benefit subject to a limit of 15,000 per month. And finally, contributions made to the Social Health Insurance Fund, SHIF. Before the amendment, these contributions were also not deductible for the purposes of computing net pay, but there are reliefs, tax reliefs with respect to both. But the amendment for tax law amendments has done away with those particular reliefs. You must also consider the other specific reliefs once you compute your tax liability. So that we deduct now the reliefs to pay the net tax liability for paying. In this case, all resident persons in Kenya qualify for tax relief that we call specifically personal relief of 2,400 per month, as well as insurance relief. And the insurance relief, we consider three figures, not two items: 15% of the insurance premiums and the actual contribution. But there's a set limit that both SHIF plus the insurance premiums deductible in a month should not exceed 5,000 shillings per month or 60,000 per year. And this insurance, we are talking about specifically premiums on life, health, and education policies. Now, this is outside the presentation. I have seen people not taking advantage of this insurance relief by not obtaining the insurance premium certificate on a monthly basis. I'll discuss that maybe later as we conclude. We discussed now the corporate tax planning. We said planning of taxes involves both individual, natural persons, and the artificial persons, corporates. Therefore, for corporate tax planning, what can you do? You could consider to establish export processing zones, which enjoy 10-year corporate tax holiday. For the first 10 years of operations, they don't pay corporate tax. They're also granted preferential tax rate of 25% after the lapsing of the corporate tax holiday period. Even after that, we have a 20-year withholding tax holiday on remittances made to non-residents. They enjoy perpetual exemptions from custom duty, that is on imports. They have zero value added tax on inputs and goods and services. They have got exemptions from stamp duty on legal instruments, and they enjoy 100% investment deductions on new investments in the EPZ buildings, machinery, applicable 20 years. You could carry out offshore business structures. This is where you move to countries that enjoy or offer lower tax rates. For example, we talk about Mauritius, Hong Kong, Dubai, and also Seychelles, and many others. Similarly, for expense purposes, we have donations to charity. Donations is considered an expense that is not allowable, and unless it's meant to specific projects that are tax exempted. Cross-cutting issues, these are general compliance or general tax planning issue that would cut across any business, corporate or even individual, that for tax reasons and for tax planning, keep complete and accurate records. Remember, in Kenya, we operate what we call a self-assessment tax regime, where a taxpayer, you are required to compute taxes for yourself and file a return. And the commissioner is supposed to presume the return is correct until otherwise. Therefore, to ensure that you defend yourself against a tax assessment, you must keep complete and accurate records. Get timely and competent tax advice. This is very key. Make sure that as you deal with businesses or as you deal with transactions, you are advised competently with regard to taxation, because like we say in normal tax language, tax compliance sometimes is cheaper as compared to non-compliance. Challenging tax assessments in legal tribunals. That means that in a nutshell, when the commissioner or the taxman rejects your self-assessment returns and either amends them or issues you with the what you call additional tax assessments, then for the purposes of planning, you could proceed and challenge these assessments. There is a whole tax dispute resolution framework that deals with handling of tax disputes, all the way from the objections to the High Court. Compliance by paying taxes on time. This point may appear simple, but in simple terms, in a reality, you could actually save a lot by paying taxes on the specified deadlines, because failure to pay tax on time would subject the business to additional penalties and interest. And remember, additional penalty and interest is not an expense that generates income. So when you pay penalty and interest, that is a cost to the business that does not relate directly to generation of income. And in fact, it is disallowable for tax reasons. And the last point, you take into account allowable deductions when computing taxes payable. You're simply saying that go through your expenses that you've incurred for the purposes of doing business, and any expenditure that has been utilized to generate the taxable income should be taken into account when computing your net taxable profits or gains. That is all for today with regards to the first topic on corporate tax planning and in a bigger perspective, tax planning. I'll be your presenter, CPA Kelly Mule David. Back to you. Okay.
Thank you very much for sorry for the echo. Thank you very much for taking your time and also for joining us today, leaving part of your deliverables for today just to listen to what we prepared for you. So we are going to the session of Q&A. If you have any question, if you have any concern, this is the time. You can raise your hand and I'll give you space to speak and ask your question. So this session will take roughly 10 minutes. And as we do that, I've shared in the chat box on how to download by filling in the form and using 200 as the code for today. Use that. Yeah. Certificate at the end. Any question? Any concern? Any question? You can raise your hand. Any question? You can type the question in the Q&A. I will share the link. Share the link. Fill the form, use 200 as the code, and remember to fill in your email correctly. You'll be able to get your certificate before 2 p.m. or by 2 p.m. Any question to our experts? Any question? Josh, Teach, thank you very much. Spencer, help us. How can double K for company lunch to reduce tax burden? And Eric is asking, what is exactly tax relief? And how do I feel it like something has been reduced? Kindly elaborate. So we will wait for the question, then CPA will answer both together.
Yes, catch. Yeah, I've seen two Sawa. Let me talk about them. Confirm, can you hear me? I want to answer the questions that have been posted.
Yes, loud and clear.
All right. Somebody's asking if I may move back. Somebody's asking, how can we use the allowable daily 2,000 for company lunch to reduce tax burden? Against normal lunch and transport. Did you say that shift relief is still there? I assume the shift being deductible means we do not have shift relief. Clarify, please. Let me answer the first question. How can we use the allowable daily 2,000? What happens is with amendments in 2024, initially companies were allowed to provide staff lunch to a maximum of 36,000, if I remember correctly the figure, but it's been raised to around 48,000. Therefore, it means that the company will be able to expense staff lunch, and that amount shall be treated as a company expenditure, but a non-taxable benefit to the recipient, to the company employees. In essence, if you're earning 14,000, but the company has advanced you extra 2K for lunch, the 2K becomes non-taxable benefit because it's considered below the threshold for taxation. Did you say shift relief is still there? No, I said that with amendments of December 27th, tax law amendments, shift relief, yes?
Oh, okay.
With amendments of December 2024 tax law amendments, shift relief as well as affordable housing reliefs were done away with. And the shift amount as well as the housing levy amount are now considered deductible in full. Relief means that first you compute tax, then you grant the relief after computing tax. In this case, for shift and affordable housing, we would grant 15% of the total amount. But now the full amount, with the revision of the law, the full amount should be deducted from your gross pay before computing taxes. The net effect is that you have a higher net pay. Spencer is asking for the purpose. At what level do you differentiate an employee for pay purpose and as a consultant only to pay going tax? I will say that the taxman has a very elaborate criteria to distinguish an employee and a consultant. For example, one of the rules that is used to classify you as a consultant is that you don't work under the direction and control of the employer. The tools of work are not provided by the employer and other criteria. But so long as you're working 24 hours or not 8 hours at the employer's premises, you're under the control of the employer, then for pay purpose, you are an employee. And remember, also consultants in most cases are supposed to be professionals registered with specific professional bodies. Kindly enlighten us on the treatment of tax and gratuity payments as outlined in the December 27th. For gratuity, before the amendments, the gratuity payables were subject to further taxations, but the amendment has proceeded to make further exemptions on taxation of gratuity. You then need to correct your slide on leave because that slide still has SHIF as a leave. Not really, SHIF is there as I wanted to differentiate a relief and a deduction. There are two different words. Reliefs are granted after computation of the net of the tax. Deductions are made before the computation of tax. So SHIF currently is not a relief, but it is a deduction. It is deducted from the gross pay before computation of tax. Initially, before December, you would compute tax, get the tax liability, then deduct 15% of SHIF as a relief. I hope I'm clear on that one.
Tax, ndio iko iTax. Alafu 3050
3050 kuanga
Cecilia
medical. Nilikuwa nafikiria ni computation ya hiyo. Okay.
3050 ni medical ya Cecilia. Sijui kama kuna hiyo reimbursement for
hiyo niko nayo. Alafu wao nilikuwa nafikiria.
ingine ni iTax.
Back to catch.
Thank you very much for the elaborate answers you've given. Anyone we are looking out? Anyone who has a comment and anything to say? Right, as we come to the end of the session, this is the process on how you'll be able to download your certificates. I've shared the link in the chat box, so you can fill in the form and then use 200 as your code. Then you'll be able to get your certificate by 2 p.m. Fill the form and I'll share the form shortly. And also, please remember that this session has been recorded. In case you did not get some part, you can be able to go back and revisit. Thank you very much. So this is the link I've shared. You can use that to get your CPD certificate by 2 p.m. Thank you very much for your time. Keep on checking on our website and following on our social media sites so that you may be able to be in touch with the upcoming session and approach to grow together. Thank you very much. You can see somebody has the recordings. I'll share just a minute. I'm able to share the YouTube link. on the chat box. This is the YouTube link. I've shared the YouTube link. You can use that to get the session today. With that, we have come to the end of the session. Unless there's any question, any concern, we begin to end it. We would love to end it there. So feel free to inbox us, feel free to email us for any consultancy, any trainings needs that your organization might be in need of, so that we can assist you accordingly. Thank you very much. Enjoy your evening and see you next time. Asante sana.
Hello. Hi, how are you? I'm all right.